Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hey,
Good
happy
afternoon.
Monday.
How are we today?
Oh, we're doing fantastic.
Awesome.
Life is great. The market's getting better. People are jumping in. Uh, Buyers are finally feeling more comfortable with interest rates. So I think today's a good day to talk about interest rates and where they are, because
Sure.
we've seen a lot of adjustments, but we need to understand why. And is it going to continue? Do we believe what we're heard, that we're going to start seeing better interest rates in the future? Is the Fed going to drop the Fed rate? How is that going to impact mortgage rates? So I want to cover all that today. So if you're listening to this, if you're a real estate agent, you need to understand this. If you're a client, it's important that you understand what moves the market. So we're going to drill it down for you right now. So everybody's seen an improvement in interest rates. So I want to go ahead and just share this screen with you. If you want to pull it up, we'll look at the bond market. Now, this is not the stock market, folks. This is the bond market. So we go back into May here. We see it was up and down, a lot of rocky roads. And then since about June 28th, we saw a nice improvement, settled down here, and then this was a Friday and this was a Monday. So it started off here and dropped to here. If it's blue,
let's be clear. Reading this really quick, Bruce. Because this is like inverted, right? So when this goes up, that means mortgage rates are coming down.
That is correct. I want this bond yield to be as high as I possibly can. So we saw interest rates improving here. They opened up here, but closed here. If this is blue, that means it closed lower. It opened lower and closed higher. If it's red, it closed higher, it opened higher and closed lower.
Right. So I got it. Red, green's an up day. Red. And on my screen, it shows green. So I'm not sure what it's going to look like on the video, but
yeah. And today is really flat. So today was as flat as a pancake. So it's been flat. That was Monday, Tuesday, Wednesday, Thursday, Friday. Today's Monday. There it is again.
Right.
So we want it to continue to go up. Now, let's just take an expansive look here, and let's look at a 5-year. So here's where we are now.
Right.
So we do have room for this thing to improve. We got room to improve. But what's going to happen is the Fed has now come out and said they may do an emergency Fed cut. Well, if they do an emergency Fed cut, why would they do a Fed cut? Let me ask you that question. Why would they want to do a Fed cut?
My understanding is they see the economy slowing down too much, and so they want to stimulate the economy a little bit by lowering rates so that people borrow more money to spend it in mostly businesses, right? That's the key, is to get businesses spending money on expansion and things like that.
Yeah.
Right?
So you nailed it, though. It's to stimulate the economy.
Yep.
So now we have to understand the dynamic and the relationship between stocks and bonds. Okay. Mm-hmm. So if you stimulate the economy, then what's going to happen to the stock market?
The stock market is going to go up.
Right. Now, if stocks and bonds typically work in a teeter-totter, one's up and one's down, the reason for that is institutional money, big money, not you and I buying a Google stock or here and there, but institutional money, big money moving back and forth. So institutional money, when they see opportunities in equities, in stocks, they move into the stock market. When they see volatility or uncertainty, they move into the bond market. Why would they move into the bond market?
It's more guaranteed money.
It's safe. You don't make a lot of money, but you don't lose money. So it's a safe haven. So they'll move money into one or the other. Now, if the Fed drops the Fed rate, it's going to stimulate the stock market. It's going to pull money out of bonds, and you're going to see the bond yield tank again. And people are going to go, why did interest rates go up when the Fed just cut the Fed rate? I don't want them to touch the Fed rate. Leave it well enough alone. Everything that's happening right now is because the bonds are improving, and we have a long way to go. If we look at this chart, These were our best rates. You're never going to get those again.
No,
Okay?
no.
Those
And
are
probably should never get them again.
No, those were your 3% rates, and they got people spoiled. But we
Right.
would like to be somewhere in this vicinity right here. If we were in around 106, you're going to see 5.5, 5.25% rates, maybe even 4.75. So
Right.
this is the territory that we'd like to get to.
All right.
Bonds move in 25 basis point increments. So we've broken through a ceiling of resistance. Now we just got to penetrate the next one, and we should be in pretty good shape. So we got some news coming out this week, and that's why I thought it was important. So I want to go ahead and just show you everything that's going on with the federal government and reports this week. And we're not going to go through all of them, but these are some heavy duty reports, and they could knock the market in one direction or another. They could make it better. They could make it worse. So we're watching this very carefully. This is not a week that I would suggest saying, I'm going to wait for a week for interest rates to drop. If you're not closing for 2 months, then hold off. If you're closing in 2 weeks, you better lock something in because it could get a little rockier before it gets better.
Gotcha. So these are all the big reports that are coming out. CPI, jobless claims, right?
Yep.
These are things that are coming up this week.
Yep.
Retail sales.
Joblessness claims is a big one, right? So
It always is.
If more people are back to work, then it could affect interest rates negatively.
Right. Yeah. I mean, the
Mortgage
thing
is like bad news with everything else. They're good.
I
When
know.
everything else is not so good, mortgages are usually great.
Right. We keep seeing these big companies laying off, big chunks of people, but then it seems like they get rehired somewhere else really quick.
Well, that's because our job reports that are reported by the Fed is not really accurate. And that's why you have to look behind the curtain, because what they tell us is true is not always true. They'll tell us as inflation is down. And what they mean is it's down from the pace that it was at. It's not down. That's like saying you were driving 150 miles an hour, but your speed's down because you're only doing 100 right now, but you're still breaking the speed limit. So
Gotcha.
So you have to read between the lines on these things. But I'm going to tell you that we should be in for a little better times, but it's going to be a little rocky between now and then. Don't get greedy. Pigs get fat, hogs get slaughtered. If the interest rates aren't too bad right now, take it and run with it. You can always refinance later. It might not be for 10 months, 12 months, 2 years before we see those interest rates stable in the low fives or maybe even high fours.
Gotcha. All right. Well, that's some good advice there, Bruce. So what else we got going on this week?
Well, I would think that if you are out shopping for homes, you are having sellers working deals, but they're slowly becoming less motivated to pay closing costs, because now that rates have dropped, and you and I have been telling everybody this for the last year, maybe even 2 years, when interest rates drop, more people are going to jump in. Sellers are going to be less willing to negotiate.
Well, and I'll tell you something that I see on my end. So I think I'm going to do a whole series of videos on this because it's really going to change a lot. But this NAR settlement that we are in the midst of implementing the changes for right now is frankly making selling real estate a lot more complex. And it seems, every brokerage is doing it differently. Every agent,
most nobody really knows what the rules are yet.
They know the rules, or they've heard the rules. They've interpreted them differently. I've got agents sending me, I just got one a few minutes ago with like, hey, here's the commissions agreement. I'm like, I'm not signing that. Like, that's not how it works. You make the offer. It's got to be included in it now. That's the new deal,
Yeah.
But, most people aren't understanding that. So, you've got to, if you're going to buy a home or sell a home, make sure that you talk to your agent about the NAR settlement and how they are handling it, and make sure they're confident in how they're doing it.
Well, and if they're not confident, now's the time to make sure you don't call your brother-in-law's ex-girlfriend as a realtor to represent
That
you.
just got her license and hasn't done one
I'm
yet.
telling you, people don't know how to choose realtors. They're the worst. They choose people they like instead of people that are good.
Yep.
And you're dealing with the biggest investment of your life. Until you decide to go out and buy a Learjet, your house is probably your biggest thing you're going to do. So why not get the most competent people? And that's why I like working with you, Tom. You know what the hell you're doing. And I'm telling you, you come up with some stuff that even surprises me from time to time. And I thought I'd been around the block enough, but that's why I like working with professionals like you, because you know how to navigate it.
Yeah, absolutely. And it's, it's definitely new. It feels weird, but we got to get through it, and just make sure you're using a professional. Bruce, I've got to go. I know you've got to go as well.
You guys have a great week.